everyone, and welcome back to M&A Plus, the art after the deal, where we explore the real strategy, structure, and execution behind transformative business moves. I'm your host, Lisa Scott, and this week is a big one. We're in the middle of what's being called Crypto Week on Capitol Hill, with Congress passing several landmark bills that could reshape the future of digital assets in the U.S. From the Genius Act bringing clarity to stablecoin regulation to the Clarity Act defining which agencies govern what, we're finally seeing real traction on crypto policy at the federal level. So who better to join us than someone leading the charge at the state level, Lee Bratcher, founder and president of the Texas Blockchain Council. Under his leadership, Texas has emerged as a global leader in Bitcoin policy, energy market integration, and crypto advocacy. From launching the nation's first state-funded Bitcoin reserve to advising lawmakers on the ground, Lee sits at the intersection of innovation, public policy, and business execution. Today, we're talking about how Texas got here, what's next for the blockchain ecosystem, and where the real deal flow is happening in crypto M&A. So I did want to also mention that we have some breaking news here. I have the news on my phone because the Genius Act is about to be signed by the president today, like right now. He's up there talking right now, but that's pretty significant. But welcome to the podcast, Lee. And I do want to talk about those bills in a little bit. But first, I'd like to kind of start with when and what inspired you to launch the Texas Blockchain Council, and kind of what was the landscape like when you first started?
Well, Lisa, thanks for having me on, and I'm excited for the conversation. And I can go a little bit into the history of it if you'd like.
Sure.
We were founded in 2019. At the time, I was a political science professor researching the intersection of blockchain and property rights. And I was also an Army Reserve officer. So I was at the U.S. Army War College Peacekeeping and Stability Operations Institute, studying the effect that greater property rights have on communities as they work to instill, property rights so that their economies can thrive and so their communities can thrive. And I ran across the Bitcoin white paper. This was probably 2015. So I got into Bitcoin and blockchain, and then really decided I wanted to pivot my academic work that direction in 2015, and decided, hey, academia is just not a place where I could be most impactful. So I left that role and founded the Texas Blockchain Council in 2019. We're a 501c6 nonprofit. So like a chamber of commerce, trade association, that's the lane that we work in. And, back then it was meeting with elected officials. It was connecting different companies or founders with regulators or folks that they needed to chat with. There was there's always been a challenge in the digital assets industry because it's so bleeding edge. There's a lot of builders and a lot of people that know how to break things and build things, and not a lot of people that know how to speak to regulators or elected officials in a way that they're familiar with. Right. And so that's the void that we tried to fill. Right.
So you sound like you have a pretty multidisciplinary background, but not so much a tech background, which is probably a good thing, because there's enough tech people in this industry.
That's right. Yeah. I'm really not a technologist. I consider myself an innovator for sure, from like a perspective of a business innovator, just an innovator in like political economy, economics, sociology, but certainly not a computer scientist or a technologist. So it's been really fun to learn Bitcoin and digital assets because it is so interdisciplinary. There's economics, there's philosophy, there's computer science, cryptography. And so I've learned a lot on the technology side, but been able to bring some of my skill sets from other roles that I've had to buttress that.
Yeah. And I get your point about it being kind of not very mature. I mean, that's what I was hearing you say yet. I actually attended the Bitcoin conference in Las Vegas this year, and very exciting, very fun crowd. Lots of technology sort of builders, like you said, not a lot of support function or or the same types of kind of professionals that you see at a lot of conferences where they help stand up the industry or help with all the compliance and all those things that come along with building a new business. So I could tell it was pretty early on, but it was a really fun conference.
Imagine what it was like in like 2018 and 2019,
right?
Even more so that way.
Well, luckily I started to notice it in 2017. I wasn't as early as you, but I started with my Bitcoin journey in 2017. And there wasn't a lot of conferences or anything like that back then.
Right.
So let's talk a little bit more about the obstacles, like when you started, like, are there more like legal obstacles, political obstacles, or cultural obstacles that you've had to navigate?
So we've navigated obstacles both within our own industry and then also externally with elected officials and the general public. I'll start with the general public. There's just some negative perceptions around digital assets, crypto, that have been really difficult to overcome from a PR perspective, just industry wide. And so we see that on a micro scale here in Texas with, perhaps journalists that are believing narratives that may or may not be accurate, elected officials that really, they've got a million things on their plate. And this is one of those industries where you have to spend a lot of time to understand it, and you have to read books, and it just doesn't come as naturally as something like AI, where you can kind of get it by just using ChatGPT or something like that, So right. it does take a lot of time to understand the industry, that's a big challenge because time is money, and it's very difficult to get the time of certain, influential regulators and policymakers. So, and then within the industry, we have kind of had this battle around Bitcoin versus altcoins versus enterprise blockchain. And we've tried to stay as neutral as we can. And people think that we're too Bitcoin maxi. Some, Bitcoin maxis think that we're not maxis, and they think that we're like, too cozied up with the altcoin ecosystem, like the programmable blockchain ecosystem. So that for somebody, maybe your audience is probably not familiar with like sort of the cultural, unique cultural aspects of the digital assets industry. That's been surprising to me, how much energy we've had to spend mediating and sort of bringing together different various groups within the industry itself. And then you even have like sort of the enterprise blockchain ecosystem that really doesn't focus on crypto at all. They don't focus on the transfer of financial value through public blockchains. They focus on the transfer of data through public and private blockchains. And that's just a totally different ecosystem.
Mm-hmm. Right. So I do want to actually dive a little bit into the ecosystem, but I want to spend a little bit more time on this because I get the question all the time as well. Like I'll get a question, should I buy Bitcoin? Should I buy all, what are all these other ones? Tell me what I should buy. And I mean, it kind of feels like, I guess a good comparison to me is it's kind of like the .coms all came about in the 80s or whenever that was. And then, I mean, we're going to see some of them are going to fail, and maybe there might be a handful that actually make it into the, long-term sort of, space in this industry. And I kind of see that happening. And I usually just tell people, well, I have these and this is why, and you have to just kind of invest in things that you believe in for whatever reason. So, and there's definitely some non-Bitcoin. Okay. Bitcoin is kind of, to me, like a solid yes. The altcoins are, to me, like different types of technologies that you can get into that may do some really cool things in the blockchain. And I have my beliefs on which ones, are doing well and have a great future. So it's kind of about research, but what's your perspective on what do you compare what's going on now to what's happened in the past?
I would put things into buckets. That's kind of how I think about it. Bitcoin is in its own buckets and its own class of its own. It's the most important asset by far. Then the next bucket is programmable blockchains, right? Like Ethereum, Solana, different chains that are competing for different projects to be built on top of them. So decentralized applications using their plumbing, if you will. Mm-hmm. And then you have meme coins, which are relatively worthless. And somehow they have multi-billion-dollar valuations, and it's beyond my comprehension. But I am a capitalist and I believe in free markets. So if people want to buy a meme coin, that's their decision. But we don't spend any time on those assets. And then you have other emerging, of course, stablecoins is a huge asset class. They don't run on, they're not like a layer one blockchain, but everybody needs to be aware of stablecoins for sure. That's a killer app being built on top of blockchains, to public blockchains, particularly some of the programmable blockchains. And then you also have tokenized real world assets. So those can be tokenized securities. It could also be other kinds of tokenized assets. You can tokenize debt, equity. You can tokenize bonds. It's starting with the easiest things to tokenize, like money market funds and treasuries. And then it's moving towards now, Robinhood's announcing that they're tokenizing equities. You're going to see, of course, a lot of bonds are going to be tokenized.
And real estate.
These are big names.
Right?
Yeah, real estate will eventually be tokenized as well. I think at first, like the LP interests in syndications will be tokenized. And that's a whole different ecosystem. So
right.
It's almost like someone saying like, oh yeah, I understand AI. Well, there's a lot of different, components of AI. What are you talking about? And I would say the same about digital assets. If you say, well, I'm into blockchain, it's like, well, that doesn't mean anything really. That's like saying you're into the internet. Like, you've got to really be a little bit more specific, because there's just so many different pockets or verticals, if you will, of business formation and productivity.
So one of the things that I've been doing the last maybe year or two is trying to understand kind of this emerging ecosystem that's, coming up in this industry. And, I do have a lot of kind of professionals from large corporations are going to be listening to this podcast, private equity companies maybe starting to look at what kind of acquisitions they're doing in the space. And a lot of, mid-level professionals as well, like in sourcing and things like that. So it's a little bit of a different ecosystem in my mind. There's miners, there's custody, it's not our run-of-the-mill suppliers that we're dealing with. There's a lot of different issues that maybe come up because of that. But how would you break down the kind of the ecosystem from your point of view? And who are the players? What's the infrastructure like?
So from a business perspective, the different groups would be, and I'll start kind of earliest in the stack. Like Bitcoin mining is the furthest you can get to on that side of the spectrum to the origination of the asset, right? And so that's a big ecosystem. There's 450 Bitcoin being mined per day on average. And that's related to a process that's hard coded into the system. There's a block reward, 3.125 Bitcoin every 10 minutes. And then, of course, that amount gets halved every 4 years. So you have an exponential deceleration of the amount of Bitcoin that's being issued into existence every day or every period of time. And then from there, you have custody. So there's hardware wallets like Trezor and Ledger. There's software wallets that you just download an app on your phone and you're able to, hold your cryptographic keys. Also, there are exchanges that if you're just investing in crypto and you're buying crypto on an exchange like blockchain.com, Coinbase, crypto.com, Kraken, etc., you can move those coins or those assets into a wallet that you control, or some people just keep it on the exchange. If you have any sizable amount, most experts recommend that you move it to a wallet that you control. And if it is a sizable amount, I would recommend hardware wallet or a multi-key custodian that can help you both hold your keys, but also have a backup mechanism that's fail-proof. Block, which is the maker of Cash App and Square, they have a really good hardware wallet that has those functionalities called BitKey. There's some multi-institutional and multi-key companies like OnRamp and Unchained, and lots of different companies that are allowing people to enjoy the benefits of self-custody, but also have some backup technology stacks that allow them to access their keys if there's a mistake, or if they misplace them. So as you move from custody, you kind of get into how do you get the asset? Well, those are the exchanges. I just mentioned several of those, like Kraken and Coinbase and others. That's a big part of the ecosystem, and that's a lot of people's first entry point into crypto is downloading one of those apps and buying it. It's a really important part of the ecosystem. Then you have decentralized exchanges called DEXs and decentralized finance called DeFi, or shortened to DeFi commonly. That part of the ecosystem is a little bit more tip of the spear. That's probably not where someone should start their digital assets journey, unless they're pretty technologically sophisticated and just want to start there. That's usually where people go after they deeply understand, the technology, how to control the asset safely, how to send, receive, transact, all of those different things. And decentralized finance is basically using software and code to lower the cost of capital and take out middlemen that, charge fees for aggregating capital formation. And so within DeFi, you have automated lending protocols that allow people to lend and borrow based upon supply and demand. And so the rate at which you're lending and borrowing is actually set by supply and demand. So if there's a lot more people wanting to lend, then the rate's going to be really low because the cost of capital is extremely low. If there's a lot of people wanting to borrow, then that interest rate goes up, and that's set by, an automated, an algorithm essentially. So, that's just a couple components to the ecosystem. I know I'm missing some of the more niche ones, but those are some of the larger parts of the ecosystem.
Yeah. And I was thinking I'm getting ahead of myself, but we'll get to this. In the M&A context, if a company or a PE firm or buys a crypto-based company, how are they going to take on all those assets and all the Bitcoin that they have, or, that's kind of one of the things that I'm trying to understand.
This is a big season for crypto M&A because there is regulatory clarity. Companies with big balance sheets feel comfortable and powered by different legislative achievements or progress, where they can now, go to their board and say, hey, we need to examine that. Like Visa is going to buy a ton of stablecoin companies. I could give you examples. Robinhood is probably going to buy a crypto exchange. Charles Schwab should be looking at buying some crypto companies. Even in the energy data center area, like AI companies are buying Bitcoin miners. Energy generation companies are going to be looking like Vistra and Centerpoint, or not Centerpoint, their utility, but like Vistra and Constellation. They're going to probably take a look at buying a Bitcoin mining company. So M&A is all over. I mean, it's happening, certainly. Like even the companies that, for example, you have companies that lend against Bitcoin because certain individuals or companies don't want to sell their Bitcoin for a lot of reasons, mostly tax related. They don't want to incur that capital gains event, but they need some liquidity. So they will lend against their Bitcoin. And right now, the going rate might be 12, 13% to borrow against your Bitcoin. Well, if a bank buys a company that does that bank is going to be able to undercut everybody else. And, the market will dictate what the rate goes to. But banks, to have a collateralized loan at 60% LTV with pristine collateral like Bitcoin that can be repossessed if the lender doesn't pay, like with a smart contract, to be able to earn 12% on that, or even 11, right. 10, 9% would be fantastic.
Right. Exactly. So I don't know if you can answer this or not, because I know you're not in the M&A world day to day, but if you were to advise like PE firms or strategic buyers, what should they be doing to evaluate the targets in the crypto space?
I would say you got to go deep on a vertical. And I think this is probably a theme of this conversation, Lisa, that we're having is you don't want to just go in the space and say, yeah, I'll look at some stablecoin companies and some Bitcoin mining companies and an exchange. That's probably a recipe for disaster. So you got to figure out what your mandate is at your firm. If you're a business or you're a PE firm, depends, that obviously makes a difference. But What's your mandate? Go deep dive into that area and understand, what's an investable company and what is just riding a trend. There are, and I think pretty soon, it's going to be tough to value some of these companies because if you're in stablecoins, it's kind of winner take all, right? There's going to be 2 or 3 companies. So if you're investing in stablecoin issuers, you got to understand, hey, this is winner take all. If you're investing in like a company that sells to stablecoin issuers, okay, they probably don't have the same potential to 20x. But there's a pretty good chance that there's going to be a market for their product, and maybe they 2 or 3x, but the downside is negligible because we can value their company, they're a SaaS product, or they have different contracts already. Mm-hmm. So, I'd just say deep dive, understand the vertical, and then understand if you're engaging with an all or nothing company or a company that's providing those services, and I would say, like, in the exchange world, those are not all or nothing businesses, but there are first mover advantage and network effects. So I do think that you'll see exchanges specialize. Like, the retail market in the US is Coinbase's. It's Coinbase's to lose. But you see other exchanges like blockchain.com or crypto.com, they have niches where they're doing pretty big deals. They have big institutional desks. They have, some interesting derivatives products. They're doing a lot of business overseas with B2B clients. So there's different niches there for everybody. And, it's not like any M&A firm is going to look at Coinbase right now. They're already public and they're too big to acquire. But, there's a lot of other companies that have really been starved for capital and actually are pretty attractive. Yeah. Just because debt financing has not been there for crypto for years, forever, really. And so, they're starved for capital. So the PE firm and the capital firm that has the capital has the upper hand, I guess is what I'm saying.
Right. Where would the priority be to deploy capital? And also, what's your view on like consolidation? Like, do you see a lot of consolidation happening in like just mining? I mean, from my perspective, I feel like there's a lot of very small mining operations going on, and it's very Wild West-ish still. What do you see happening like in terms of consolidation?
Absolutely. Especially in mining. Mining is a zero-sum game, and there's only a certain amount of Bitcoin each day that can be mined. And that is, since, essentially prorated, you're receiving a pro rata share of your percentage of the hash rate, depending on what kind of mining pool you're using and how you're going about it. But for that reason, it's very much economies of scale and a commodity business. And throughout history, we see commodity businesses and economies of scale businesses always lead to consolidation. And so that's going to happen, no doubt in my mind. The other parts of the ecosystem, it's a little bit more nuanced, but I do think even if we zoom out from a protocol level, we're going to have consolidation. Bitcoin is going to it already owns and will always own sort of the reserve asset side of the equation. It remains to be seen which layer one is going to own the programmable blockchain sort of smart contract platform. What is going to be the public chain that takes that market? And there could be a couple, there could be, a few, but there's not going to be hundreds. And there's thousands and thousands of digital assets out there, and most of them are worthless. A lot of them are just ICOs by a different name, and they're just trying to access, they're trying to sell equity for their project at an early stage. And that's just extremely risky. I mean, you got to be a really accomplished venture investor to invest in those kind of projects. Right. But consolidation is definitely the name of the game. There's just been an explosion of projects, venture capital, lots of things dying, lots of companies dying, lots of companies getting folded up into other companies. So I expect there to be a ton of that activity in the next year or two.
So just a simple question. So the miners mine the Bitcoin. So what happens when all the Bitcoins are mined? How are the mining companies going to operate after that?
Yeah, that's a great question. So because of the exponential deceleration of the issuance of Bitcoin, like I talked about earlier, all of the Bitcoin actually won't be mined till around the year 2140. So over 100 years from now. Their revenue gets cut in half every 4 years, and their profit margins are changed based upon how efficient of an operator they are. Like if you put it in the oil and gas perspective, it would be like every 4 years, the amount of oil in the ground gets cut in half, and you're only profitable if you are an efficient operator, right? So it's very similar in that way, except for obviously the artificial scarcity in Bitcoin based upon the halving mechanism that's programmed into the system and that will not change. So with that said, the miners after 2140 will make money off of transaction fees. Right now, transaction fees make up less than 5%, sometimes only 1% of a block. So it makes up 1% of their revenue. The rest is the block reward that I talked about, that 3.125 Bitcoin every 10 minutes. By 2140, it's sort of the expectation and kind of the market forces will dictate. But, most people that have an economics background and look at this industry know that over time, that revenue will shift towards fees. And, maybe 30 years from now, it'll be 50-50, half transaction fees and half block reward. But 100 years from now, it's going to be 99% fees, transaction fees, and 1% block reward.
Interesting. So one of the things that I learned, I think it was at the Bitcoin conference, and Michael Saylor was talking, and he was saying something about the fact that, make sure you're in a state that's pro crypto because it's going to be better for you. And I would assume that might apply to companies buying companies even. I mean, if you're in a state that's anti what you're trying to do, it might not work out as well. So that's a good segue to talk a little bit about Texas specifically, because I know Texas I don't think it's just a national leader. It's almost like a global leader in this sort of new, crypto formulation, formulating this crypto business. And not only that, but Texas itself is like the first state that has funded its Bitcoin reserve, if I'm correct. That just happened, I think. So that's good. So let's talk a little bit about Texas and kind of what are the recent important initiatives that have been happening the last couple of years.
Yeah, we've been around, as we said in the intro, since 2019. So been working to make Texas a global leader in this industry. And early wins were small, but important. We had different pieces of legislation that were passed. One in particular that adjusted the Uniform Commercial Code to clarify that Bitcoin and other digital assets, you could perfect your security interest in them through possession of the cryptographic keys, and not necessarily you wouldn't need a UCC1 financing statement or something like that to perfect the lien. So that's a very foundational and wonky and nerdy piece of the puzzle, but it was an important piece. And then we passed other legislation. We've also worked with the Department of Banking about their guidance towards Texas chartered banks. And there was some guidance issued in 2021, and then more guidance has come over the years. And in general, just fostering an environment where the governor, particularly Senator Cruz and even to a lesser extent, Senator Cornyn and many of the members of the legislature from both parties are open to this kind of innovation. And that's helped to attract entrepreneurs and capital. And even during the Biden administration, and this is not a political statement, it's just sort of a statement of fact, the Biden administration was not very friendly towards the digital asset industry. And even during that administration, the Texas Blockchain Council sued the federal government on multiple occasions and won on each occasion related to oversteps and overreach. And we did that in Texas because we knew that Texas courts would understand the importance of business and they understand the importance of innovation. Whereas the DC circuit might, lean a little bit more towards deferring to regulators. So Well, and the main reason is we're domiciled in Texas, and whenever you sue the federal government, your standing is based upon your jurisdictional location, right? So you're going to get a judge in the area where the suit is coming from. So, all of that, combined creates an ecosystem where there's definitely a vibe, if you will, where companies want to domicile in crypto-friendly states. Now, it is hard to get around the gravitational force of Silicon Valley and Wall Street. So New York and California still have really strong crypto communities. It's not really because their states are pro crypto. It's just because they have such a strong path dependency towards capital formation, venture capital, innovation, technologists, developers. And that's not overcome overnight. So we're working to increase the Texas landscape from those perspectives, just from a broader, venture capital perspective.
So explain more about what is the long game for Texas?
Well, I think part of it plays into the Texas Stock Exchange being announced. And, I think the Dallas-Fort Worth area in particular becoming a hub for capital formation. Texas Stock Exchange, NYSE Texas, NASDAQ is even getting in on the fund. So there's going to be a trading floor in Dallas. There's going
Exciting.
to be, I know. I think Texas is going to continue to grow, based on the current trajectory. Texas could surpass California in GDP in my lifetime, which would be pretty astounding since California's population is so much higher. It's 20 million more people live there. So, I think our GDP is on a faster growth rate than theirs. Of course, theirs is still bigger, but we've already long since surpassed New York, and Dallas-Fort Worth is about to surpass Chicago from a size perspective, has already surpassed Chicago from a professionals per capita perspective. And so Dallas-Fort Worth will be the third largest metro in the country in the next year or two, second or third only to LA and New York.
Yeah, I can tell. I've lived here 20 years and I've seen it grow the last 20 years. It never seems to stop.
Yeah. Yeah. So it's
so another question.
Time.
Yeah. So Texas seems to be kind of a leader. So do you think, are there other states that are kind of trying to copy Texas? Maybe which states are they?
Yeah, there's some states that have done some great work. Wyoming has done a lot of great work, and even Texas has copied some of their stuff too. So we have a great working relationship with Wyoming. It's just a very small state with a very small economy, so they really can't. They can lead from a philosophical and thought leadership perspective. But they can't lead from a business perspective. So, but they're doing great work there. It's sort of like there's small states that are being innovative and doing really good things, like North Carolina, Arizona. But California, Texas, and New York are still just the dominant regions for business. So there's that. And I think we're probably the only state that has the fortune of having both. Really, really strong economy, pro-business state, no income tax, no state income tax, and also pro crypto and pro digital assets. And it also doesn't hurt that about half of the mining that takes place in the US takes place in Texas. So Bitcoin mining is also really, really big business here.
Right. So I came across this term DAO, so decentralized, and I forgot what it stands for, but
Decentralized Autonomous Organizations.
Okay, DAO. Did I say it wrong? DAO.
You got it right. Yeah.
And I saw that there's not Texas yet, but there was a state that allows those organizations to be LLCs, which I thought was kind of interesting. And it looks like Texas is trying to go in that direction as well. But can you just explain a little bit? I think my audience especially would be interested, especially the lawyers that are on here, in that sort of new type of organization.
Yeah. So DAOs, Decentralized Autonomous Organizations, often called DAOs. So if people have heard of that term, those are entities that are controlled by a governance mechanism that typically involves, ownership of tokens, so ownership of governance tokens. And so say there's 1,000 governance tokens and you own 100. Well, you own 10% of the governance and 10% of the voting rights. So it's not a typical corporation like a that would have a board of directors. It's very decentralized, and there are a few DAOs in Texas, but you're right. The only state, well, I think there's 2 states now actually that have DAO legislation. I think New Hampshire or one of the states in the Northeast passed some legislation, but Wyoming has DAO legislation, and it's based off of the Unincorporated Nonprofit Association entity formation legal framework. And so they now have what's called a DUNA, a decentralized unincorporated nonprofit association.
Oh.
They also have blockchain LLCs. Not really many people are using the blockchain LLC because it removes like the limited liability protections. So most people are moving to DUNAs, decentralized unincorporated nonprofit associations, if they're forming an entity through a DAO. And DAOs are really fascinating and really interesting entity structures. They're a little unwieldy, and you have to be pretty technical and set up some really strong governance for them to work. So there's some DAOs that have not worked, but it's certainly something that we are hoping to do in Texas, is to formalize it. But there are DAOs that are forming under the current entity formation laws in Texas, and they're not having too much trouble. It would be better though if we passed, and we have attempted to, a decentralized unincorporated nonprofit association legislation. And that is one of the things we copied from Wyoming. And I wouldn't say fully copied. We made it our own, but we used some of their language with the help of some very talented attorneys. Obviously, the Texas Business Law Foundation had some thoughts on that. And so I think it's just not quite ready for prime time, as in like, you're not going to see big corporations shifting their governance to DAOs anytime soon. But I think it will become a more popular structure for certain startups, depending on what kind of problem they're trying to solve, and certain, public benefit corporations or different groups that are trying to mobilize or activate a large community towards a common end. So a little bit different than venture capital, I guess. But you can still certainly have a monetary component to it and benefit as an early investor, just like you would in venture. But it is certainly one that people are going to have to get used to.
Wow. That's interesting. Little fuzzy still to me, but I'm trying to learn more about it. So let's move on to the Genius Act now. So, while we were talking, I saw it get signed into law. So it's basically the first ever crypto law that's been signed into law, I think, right? Is that right?
That's right.
On the federal level. So what does that mean for us in Texas?
Well, I think it's just more tailwinds for the industry writ large. And it doesn't really change anything from our perspective. The Genius Act particularly deals with stablecoins, and it does create a framework for stablecoin issuers like Circle that issues USDC or Tether that issues USDT. So I think what we'll see is a proliferation of interest in stablecoins. Lots of banks are going to get involved. Lots of the SIB banks, systemically important banks, are going to try to launch their own stablecoins and compete with Circle and Tether. And it is a bit of a winner take all, like I mentioned earlier. So I think you could see only 3 or 4 real large stablecoin issuers and hundreds of, almost stablecoin or, attempts at launching a stablecoin. So, we advise a lot of folks and say, hey, unless you have a huge consortium, massive capital backing, or you're like JP Morgan, you probably shouldn't be trying to issue a stablecoin, but there is a lot in the stablecoin ecosystem that you can consider as you plan your business strategy around stablecoins.
Right. Do you think these exchanges that you're talking about are becoming like banks? I mean, they're not really banks, but they seem like they might become a bank.
Yeah, I think some of them are trying to acquire banks or apply for banking licenses. I know that's public information, and I would support that. I think there's probably a pretty distinct. I think more of the exchanges are going to get into just traditional equities and other kinds of exchange activity before they get into banking. But there's certainly going to be traditional finance is going to be moving closer towards crypto, and crypto is going to be moving closer towards traditional finance. And eventually, some of these companies, you're not going to be able to tell the difference. Mm-hmm. That's probably a couple of years off, but it is moving. It is definitely trending in that direction.
All right. So new topic. So for legal, finance, and kind of these consultants that are all around that are interested in this space, they want to support and enter this space. What's the best way for them to align their expertise?
I'd say if someone hasn't done the deep dive, they probably need to start there. They need to start by reading like the Bitcoin Standard or Inventing Bitcoin. Mm-hmm. There's any number of books that you could read on kind of the digital asset industry. And you have to put in 100 hours worth of study before you can, really even understand.
Yeah, that's a good point.
The nuances.
I'm probably at 50 hours.
Well, you're more than most for sure. So once you get to that 100 hours, they say it takes 10,000 hours to be an expert. Well, you don't need to put 10,000 hours in, but put 100 hours in of study over the course of a couple weeks or months. And then, you'll pretty quickly see where your industry or expertise overlaps, right? Like mm-hmm. if you're, an attorney, then you've got M&A, you've got, sort of entity formation, token, securities, law, understanding kind of the Clarity Act and like, is this, this project a security or commodity? Lots of tax, lots of interesting work in the tax side of things particularly for tax attorneys that specialize there. Lots of litigation opportunities around just new case law. So those are some examples where like someone in the legal field would probably want to dive in. Depending on if you're a transactional attorney versus like a litigator. But yeah, there, I think each profession will find its niche. Maybe not the medical profession. I don't know if
right.
too many doctors are going to be getting into digital
right.
assets, but perhaps if you're building like ERP, EMR, and electronic medical record software, right. Then you probably should be looking at blockchain
or smart contracts in the medical world.
For sure.
We need that actually. We need some speed. Really we need some speed and some clarity, transparency.
Speed, transparency. A lot of that goes back to like digital identity and who owns the data. And you have a way to represent yourself digitally that's sort of attested to by the state, but also you custody, and it's sort of a self-sovereign. Hey, this is my wallet. This is my digital identity. I can own my own data in this way. I can permission it out in this way. There's not anyone who's tackled that yet. And there's a big push and pull between centralized digital identity and decentralized digital identity. And I'd put Microsoft probably in the centralized camp where they want to own digital identity for, every American, because that's very monetizable. And it's also kind of like Google search, right? They would also be providing a really good service. So it's hard to blame Google for making money off search because we all love free search. It's the same way in digital identity, right? We would all love software that works really well, that allows us to have digital wallets and digital ID and zero knowledge proofs and be able to prove who we are, where we live, how old we are, without actually having to reveal that private, sensitive information to the whole world.
Right. Exactly.
So it's a big challenge, and one that I don't profess to understand as well as some. So
yeah, it's definitely evolving. It's an evolution. And then there's also the organization like yours, the Texas Blockchain Council, that can have individual members or companies join. And I mean, I've been a member for a couple months now, and I'm already learning more. I mean, you get exposed to a lot more, information and conferences and things like that. So that's maybe another opportunity for people, here in Texas. So, okay. So I have a few lightning round questions. This is the fun part. So here we go. Most underrated innovation in blockchain right now.
Underrated innovation. I'd say tokenization of real world assets. Stablecoins are kind of a tokenization of real world assets. It's like tokenizing the dollar. I think every financial asset will be tokenized. People won't really know that it's tokenized. It'll just move on those rails.
Right.
But you don't have to like understand even what tokenization means to like own a stock that's been tokenized.
Right. It'll all be happening in the background.
Yeah.
People's 401ks will have Bitcoin and they won't even know it necessarily.
Yeah.
All right. Next question. One law or regulation you'd pass tomorrow if you could.
A de minimis exemption. So that means like, in Forex, in the world of foreign currencies, if I buy euros and euros appreciate relative to the dollar while I earn them, I don't have to pay capital gains on that because it's considered de minimis. Unless I'm like a Forex trader and I'm making like lots of money doing that. Mm-hmm. So we need that for crypto so that when I go buy a cup of coffee with a Bitcoin or Ether, which is, ETH, which is Ethereum's native token, I'm not having to track my basis and like being like, all right, well, I just spent $5 worth of Bitcoin. When did I buy that Bitcoin? How much capital gains do I have to pay? That's a huge impediment.
So fast forward 10 years, what's one thing you hope people will say about the Texas Blockchain Council?
I hope that people viewed us as a convener of innovators that put Texas on the map and made Texas the digital asset capital of the world.
And one last question, which I know you gave some recommendations already, but this is for crypto skeptics. So what book or article would you recommend to crypto skeptics?
Great question. So I mentioned a couple books already. There's some really great writers that have blogs and posted white papers and are not necessarily like conflicted about like shilling one particular project over another. Nick Carter has a lot of good writing on this stuff. He's a venture capital guy, kind of economist. So I'd point people towards the Bitcoin Standard, Inventing Bitcoin, if they really want to understand like Bitcoin. Mm-hmm. And then more recently, if you searched, or if you really just used ChatGPT, but if you look at Nick Carter's writing, he's got a lot of good writing on the topic too. And his is more broad, right? Stablecoins, smart contracts, DeFi.
Yeah, I'm going to read that. I started with the Bitcoin Standard, which the thing about the Bitcoin Standard that kind of got me thinking about all this was the long discussion about money in the beginning and why money is valuable and just things that I never really think about. You just sort of take it for granted. But once I started to understand that Bitcoin, the whole Bitcoin, thing became I had a totally different perspective of it. So it's a great book. I'd recommend that one. So Lee, thank you so much for joining us during such a pivotal week. Your insight into where crypto policy and business intersect could not have been more timely. With the Genius Act becoming law today, the Clarity Act passage, and a firm stance on CBDCs, which we did not cover, but that's for another day. The rules of the game are finally starting to take shape, and Texas is already ahead of the curve. For listeners who want to stay engaged with what's coming next, I highly recommend following Lee's work at the Texas Blockchain Council and exploring ways to get involved in shaping this new era of digital infrastructure. Into-Edge is also a standard partner member of the Texas Blockchain Council. If you'd like to learn more, you can visit the resource section of our website at intoedge.com. Our crypto series is also available in our LinkedIn newsletter called M&A Plus, The Art After the Deal. You're welcome to connect to both Lee and I on LinkedIn to follow our updates. So thanks for listening, and we'll see you next time.
Thanks for having me, Lisa.